Hey folks, welcome to part 2 of the Dividend Investment Portfolio series. Call this the February 2025 report or February 2025 edition. Be sure to check the last video out if you haven't already, because I go into all the details about why I created this portfolio, things like that, but I'll try to keep this one short and interesting. So without further ado, let's get started. Again, we're going to talk about what happened in February, and then we're going to talk about what's next to expect. And just a reminder, this video is not financial advice, so don't expect it to be. Strategy. So this is a slide I stole from the last presentation, but what did we do? We're funding $1,000 a month. We're going to identify criteria for strong stocks, which I still haven't formalized that criteria, so just kind of playing it by ear. We're going to strategically execute purchases. So basically kind of like dollar cost averaging, but also timing the market within that 30-day dollar cost average window. Again, watch the last video if you want more of an explanation around that. But number 4 would be to identify success metrics. I still haven't time to get into this. I've been busy with some of the other stuff. So pretty much just going to, for lack of a better term, invest blindly until we have this. But the goal is to have number 2 and number 4 sorted out sometime soon, so we have a formal process to follow. Let's talk about funding. So what did we do in 2024? Well, first things first, I funded $1,000 because that's the goal, to fund this $1,000 a month, if not more. But for now, it is going to be $1,000. So we funded $1,000 into this Fidelity account in February. And then what did we do with that money? Well, we made a few trades, specifically a couple trades. So as you can see here, I bought Pepsi and I bought Altria Group. So you'll see the exact cost basis in a little bit, but based on the price, and I don't have the exact fundamentals for you right now because I'm in a rush, but it seemed like a promising entry point to purchasing the stock. And again, with somewhat of a promising dividend track record. So I decided to make those purchases. We'll see how they did in a few slides here. And then in terms of what kind of dividends I got in January. So really the only dividend I got was from Realty Income. And that paid me $2.11. The rest was in a money market account. So that's not actual dividends, that's interest, but you could kind of use the term interchangeably. So that gave me $1.49 for a total dividend for February of $3.60, which you'll see in a moment here. But after making those purchases, what does my income look like for the next 12 months, right? What is that forward yield? Well, this portfolio now is going to generate, about $101.72 in the next 12 months. So that's kind of one of the metrics that I came up with to track this. And it's about double what it was before, if I'm not mistaken. So far so good. It's looking good. And then just kind of looking at the portfolio, like how did everything turn out, right? So you have all of the cost bases here, like the average cost basis for every share of every ticker that I purchased. You could kind of see here which, I see this as a very useful tool, the 52-week range, because if you're on the lower side of where the value is at based on a 52-week range, and the stock tends to be volatile or tends to kind of, eventually go back to its high, then, at the very least, Pepsi and Realty Income are probably reasonable trades. Verizon, not so much anymore. Well, but that's because it rose since the last time I purchased it, which was, a month ago at $38. So that really kind of, appreciated in value significantly, as you could see here. And that's part of why this works, right? So I technically bought Verizon over here, and now it's all the way over here. So that was a good buy. In contrast, can't really say the same for Altria Group, but again, it kind of rose. So this isn't exactly where it is. It's probably over here where I purchased it. But yeah, overall, if you look, we started this about a month ago, and keeping the dividends aside, this portfolio is up 8.41%, right? That's typically the type of return you would expect over a year, and we've gotten that in just a month. And there's a good reason for that. This obviously isn't going to sustain or repeat every single month. But specifically Realty Income and Verizon and PepsiCo, these have all done significantly well since I purchased them like a week ago to about a month ago. So And just kind of getting into the reason of that. So with everything going on in the economy and like tariffs and things like that, there's just a lot of uncertainty and volatility. So what you see right now, and hopefully if you're watching my Lamborghini fund portfolio where I'm just kind of going all in risk, right? I'm buying like tech stocks or like an ETF tech. That might not be performing so well in a volatile market where people are kind of bearish. But in contrast, stocks like these, where you have value stocks that actually generate income, that pay you dividends, they tend to perform well because you're moving from a risk-on sort of mindset to a risk-off mindset. So you see that Bitcoin right now is crashing. Well, that's because people are selling Bitcoin or they're fearful and they're going into something that's a little more conservative, like these dividend stocks, because they have a good track record. And that's frankly the straightforward reason why you see the big jump here, why all of these rose so suddenly, because we're going into a risk off sort of, I don't want to say economy, but mindset, maybe not in the long term, but definitely in the short term. As you could see, that's exactly why you see these huge gains over just a few days, if not weeks. I'm super proud of with how things turned out is in terms of diversifying. If you look at these 4 securities that I have, not just the cash, they're pretty evenly distributed, right? They're all about 20 to 21%, which is just phenomenal because that means you're not, overly exposed to one security, especially since I only have $2,000 in 4 securities. So it's really easy to kind of throw that off sync, but so far so good. So we're gonna hopefully try to maintain that track record and be as diversified as possible. And then down the road, maybe even diversify industries, not just tickers, right? So don't necessarily want to be 50% into one particular industry just because it has more different tickers or securities to buy. So really happy about that. Let's hope we continue to maintain that track record. Moving on, this is just kind of the month performance. So you could see volatility. So I funded $1,000 February 3rd, and this is kind of it went up and then it went down a little bit, and that's where we are today. And then let's, just overall numbers. How did we do in February? So my dividend income, once again, was $3.60. I funded $1,000. I purchased Pepsi and Ultra Group. The current account value, as it stands right now, is $2,143.07, of which I only deposited $2,000. So before any dividends, it's up $143, which is quite significant for just a 1 month period. But again, we talked about the reasons why. Current cash position. So despite making those 2 trades, I still have $350 left, which I tried to buy. I did put in a limit buy order for a particular stock that I won't mention just yet, but stay tuned for the next video when I reveal that. Hopefully that'll execute. But we did kind of end the month with quite significant amount of cash, which is not so desirable, because I did want to kind of use that DCA strategy where we have no money left over at the end of the month, but it's not too bad. And then baseline metrics. How is this portfolio performing? Well, the 12-month forward dividend yield, right? So that $101.72 divided by the $2,000 that we put in, that's about 5%. And again, this is a metric that I made up, right? Maybe you would take this number and divide by the current account value or stuff like that. I'm not getting into that. For now, I know I put in $2,000 and this is what I'm getting out of it in terms of a dividend. So let's just leave it at that. It's 5.09%. And then the portfolio growth. So, obviously it's up $143 and I put in only $2,000. So that growth, aside from the dividend yield, is 6.95%. And so the idea is if I maintain this portfolio growth, if this stays 7% throughout the year, it doesn't go down, hopefully it goes up, but let's say it doesn't go down and it continues to pay me a dividend at this rate, which it should, because that's how we kind of pick these stocks, because they should pay a consistent, reliable income stream, then my total after 12 months, my total yield should be more around 12%. So that's the kind of beauty about these dividend portfolios, because it kind of gives you a little bit of cushion. I mean, yes, am I going to, regardless of this whether, and we talked about this in the last video, but regardless if the portfolio goes up or down, I'm going to have to end up paying income on this 5% unless it's in a retirement account. So from that standpoint, it might not make sense. But if you're looking for a mixture of potential growth as well as a mixture of income, then the numbers speak for themselves. So that's all I'm going to say. And next steps, again, we're going to continue to deposit $1,000 a month. We're going to identify the next set of stocks to purchase. We're going to try to identify the best time to buy those specific shares based on their price or what the market's doing sometime in March. So we'll see what happens. And then finally come up with metrics for consistently picking favorable stocks. So obviously we've done a good job because we are substantially higher in that first month. And, we're not day trading here. We're just trying to time the market, do DCA. So far, so good, right? So just continue to do that and maybe come up with a framework that can consistently do that. And yeah, thank you for watching. Be sure to subscribe to the channel if you haven't already, and follow my socials, specifically or especially my Instagram, where hopefully I will be posting more beautiful posts, things like that. So be sure to check that out. Also might have other stuff in the description for you, like a blog or a stock portfolio tracker. Maybe you could track my cost basis, or maybe, a link to where I can show you exactly what I'm buying, when I'm buying, if you do want to get some inspiration. So we'll see. So be sure to do that, and I will catch you on the next video. Thank you for watching.